Hi, I'm Lisa Arthur, the U.S. Director and Global CMO for Sensedia, a global API solutions and integration leader. Welcome to Sensedia Talks, a series of thought leadership webinars on enabling a more digital, connected, and open business world. Today's webinar, the first in our series, is Leapfrog Financial Powerhouses with CFPB compliance and open banking adoption. Open banking in the US was sparked back in 2017 and has been growing in breadth and depth ever since. Last fall, the Consumer Financial Protection Bureau, the CFPB, published its draft Section 1033 of the Dodd-Frank Hall Wall Street Reform and Consumer Protection Act, and they sought public feedback on that draft in response. The CFPB rule, among other things, directs all consumer financial service providers to give secure and controlled access of a consumer or credit union member's data to that consumer. This concept, open access to a customer's data in a secure and controlled manner, is referred to globally as open banking, and more holistically, and we'll talk a little bit about that today, as open finance. Other countries have successfully implemented open finance strategies, gaining opportunities in balance with strict regulations. We can learn from them and explore within our own markets what that means for banks, credit unions, and fintechs. And that's exactly what we're going to do today. We've put this webinar together to discuss the impact and opportunity with CFPB Section 1033. We're going to really talk about Sicredi, Brazil's largest and oldest credit union, on how they drove real revenue results by focusing on their member experience and adopting open finance strategies. We're going to look at fintechs, credit unions, and banks, and how they can collaborate to get the most out of open banking. And we're going to learn how FDX is working across the industry to drive secure and controlled compliance. And finally, we're going to talk about the real opportunity to leapfrog financial powerhouses with an open finance strategy. And to share these different perspectives, I'm super excited to introduce our panelists who come from the credit union, the fintech, and from FDX, the standards regulating body for North America and Canada. So let's dive in and welcome Elaine, DW, and Don. I am going to ask you all to briefly introduce yourself, your role, and your company, and then we'll dive into the questions. Elaine, over to you.
Okay. Hi, Lisa. Hi, DW. Hi, Don. I'm very happy and excited to be here today and to be able to share some of my experience as Open Finance Product Manager at Sicredi, a cooperative financial institution with more than 120 years of existence. We are organized in 5 regional cooperative centers with more than 100 affiliated local and autonomous credit unions. And I am very proud to say that voluntarily, we were one of the first financial institutions in Brazil to adopt the open financial system.
Congratulations on that. And I know you've got some exciting results to talk about, as well as the journey that Sicredi took. Thank you and welcome, Elaine. We're thrilled to have you. Next, I'd love, DW, for you to introduce yourself and your organization.
I'm DW Farrell, CEO of Localite, and we're a fintech, but also a public benefit corporation. And from a consumer standpoint, it is an app that unites independent businesses, a reward system that works like local cashback. And we work with banks and credit unions, allowing them to add a rewards program to their checking account without dipping into interchange revenue, essentially a way to move their existing account and card to top of wallet. And we have partnerships with Visa and MasterCard to help with those relationships. And I'm excited about this topic because in my background, I have worked in the fintech arena for over 20 years, and platforms that I've developed in that space have driven over the years over $5 billion in commerce. So it's in my own experience, this space of making financial data more democratized is absolutely a critical space and opportunity. And we want to make sure that the advantages of open banking are not overshadowed about the worries.
Thank you so much, DW. We're thrilled to hear you. And I know in the prep session, you've had some really cool things to add insight on. So we're looking forward to hearing from you. And last, but certainly not least, our friend from FDX, Don Cardinal. Please introduce yourself, Don.
Hi, I'm Don Cardinal, Managing Director of the Financial Data Exchange. We're the leading data standard for open finance in North America. And while we do intend to apply for recognition by the government, we have not been recognized as of yet. We have 76 million consumers in North America who are sharing the data securely and with permission. And it's a testament to an adaptive and growing space in open finance. So looking forward to talking to you about some of the opportunities we have with open finance.
And I will add that we have been proud members of FDX since 2021. And Don, it's a pleasure to have you once again and to share the online stage with you this time. Let's start our conversation focused on the big picture for now. Let's talk about the timing of when we can expect Section 1033 from the CFPB. You know, I detected a little bit of skepticism from some smaller credit unions, CEOs I've talked to over the last week about the timing. But I also know that at the March FDX Global Summit on Open Banking, Don, we had Director Chopra there who spoke a little bit more transparently about an expected timeline. And I'd love to get your perspective. You've been steeped in this, both from all of your organized members and in working with the CFPB. Can you give us your perspective on the timing? And we have a graphic here to kind of underscore your points.
Sure. So in October of 23, the proposed rulemaking was published, and in it, they were gathering input and have since gathered all those requests and responses. So last month, he gave a speech at our summit, and he talked about a fall delivery of a final rulemaking. In addition, his public blog posts and other speeches and data from the CFPB has led us to believe that will be in the fall. It is likely the current tea leaves amongst my members and others in the space who are knowledgeable. We're all looking towards October, right before the election. So that will be a final rulemaking. Now, the final rulemaking in and of itself, codifies certain things. And if the proposed rule is effectively put in place as is, it will kick off a timeline of a series of toll gates based on institution size. The first of which will be roughly 6 months after, so that's roughly April 25, roughly a year after, so you're looking at October 25, and then 2.5 years, and then finally 4 years for these smallest institutions. The reason why I don't think it will be overturned should there be a change in administration or anything else is for several reasons. One, this rule has a lot of bipartisan support. There are a lot of folks on both sides of the aisle who like the privacy implications and the security implications. Two, there's a lot of interest and scrutiny from your regulators in third-party risk management, and the idea of sharing IDs and passwords and allowing screen scraping just is no longer tenable. And this provides a solution for it. And of course, the FDX standard is free of charge. And we already have, again, 76 million out of what we estimate, so maybe 150 million bankable adults in North America already using one standard. So for all of those reasons, we believe it will be very durable through whatever changes happen in Washington.
Thank you so much. And I think that's really important for our audience to hear. And I know on your site you have the transcript from Director Chopra, which I would say everyone should go check out. We'll make sure it's in the resources as well. So now, when we think about some of the challenges, right, beyond the timeline, Don and DW, this question is for you. What do you think are the integration challenges presented by open banking versus the opportunities that community banks, credit unions, and fintechs can capitalize on, given this extended window, that long tail that they face to this ruling? I'd love to hear what you think is the real opportunity, the challenges, and then the real opportunity to leapfrog the competition.
I can jump in and start to answer that. So from a fintech perspective, there's, services that we offer that are symbiotic with banking. We really seek to forge partnerships that are mutually beneficial, increase the membership and retention, member experience. The goal is top of wallet, top of mobile. But there's certainly challenger banks and fintechs that, by all appearances, would seek to compete with banks and credit unions and draw away. And one of the potential fears is that open banking would give them a lever to do that. But the default right now for challenger banks or any kind of financial technology firm to do some sort of integration is to get user IDs and do screen scraping. And that's a huge vulnerability. It's been a vulnerability for over a decade. And there's no end in sight unless there's something that's a better system to replace it. And so right now, with banks and credit unions getting a lot of traffic, and they just don't know where it's from. And you don't have any signals to say, this is someone who's considering leaving our establishment, and suddenly they're gone. So the shift to a standard, permission-based, based on existing standards and such as OAuth, that already are proven to balance the need for access on the consumer side with the security concerns and the existing legislation around handling data. All that results in the bank or credit union being able to know that this member of ours wanted to connect data from another institution or fintech, and having that insight itself is incredible. I can't personally speak to how each institution will navigate this, but when we're talking about the timeline of where within 6 months, the large institutions need to be fully compliant with the new rules, and then 2.5 years, the mid-size, that really means that the majority of accounts, the majority of consumer holding accounts, will already be benefiting from open banking. They will be trained on the expectations of within 6 months to 2.5 years of what it means to encircle their lives with their banking data, regardless of which institution it's at. And the institutions that serve that will absolutely benefit from being early adopters, jumping in as early as the first 6 months when the big, the major institutions have to do it. That's when it starts to train the consumer to have the expectation of control of their data. And so I'm really excited to have Sicredi here to talk about how they've benefited, but I'll pass it over to Don to provide any more detail.
All right, Lisa, let's have some fun. Let's talk about FUD, fear, uncertainty, and doubt.
Ooh, one of my favorite topics.
So again, there's this fear out there that, oh my gosh, open finance will lead to a mass exodus of my consumers. Nowhere in the history of open finance, open banking, in any jurisdiction have we seen a mass exodus of consumers, period. UK, Australia, Brazil, other jurisdictions, it just doesn't happen. Quite honestly, most of you in this audience do a great job with your products, your pricing, and your servicing. Having an extra channel doesn't impact whether or not people do or do not stay with you. If you remember back in the day, and I'm showing my age, online banking and mobile banking, it's the death of the branch. Brick and mortar's dead. Here we are in 2024. Guess what? Brick and mortar's still very much alive. So don't be afraid of it. It is a net new channel. And as DW said, it's going to be incredibly useful. For one, your data is already being shared today via screen scraping. But wouldn't it be great to have that visibility to understand, hey, a monoline card company or a monoline mortgage company or some other company is requesting data? My first instinct is to then let marketing know, hey, make a credit card offer, make a mortgage refi offer. You now know that because as a banker, remember back in the day, the time you find out a customer is leaving you is when your balance zeroes out. That's too late. Now you can intervene in that. Two, how many times as a banker, if you wondered what your customer's share of wallet is? Well, gosh, I don't know what held away assets they have and held away relationships they have. With open finance, you know with certainty. And that allows you to really very carefully, surgically allocate your marketing resources and tailor your messaging to real value add for your consumers. And we're going to we'll talk to Sicredi, not to steal Elaine's thunder, just how much wealth creation and value creation they were able to do as a credit union with this knowledge. And indeed, it's been a net multiplier. So this is a net new channel. Do not be afraid. But if you wait, your peers will do this. And I'll leave you with another piece of history. Do you remember when online and mobile rolled out? You were asked, hey, when are you going to have online banking? And you go, well, it's coming. Hey, when are you going to have mobile banking like these other big companies? Well, it's coming. You're going to be asked about this, and you don't want to be, well, it's coming. So that's why you should move early and take advantage of this stuff. It's only a net positive. And so not to steal Elaine's thunder, but that's a good segue into her stuff.
It's a great segue. And I love that we're addressing the FUD up front because it's time to put that to bed and look at the value, right? So you guys did a great tee up for Elaine from Sicredi. And Sicredi did a really incredible thing. Elaine, you and the team went early to embrace open banking. And you did that based on your members, right? And what was good for the members. I was wondering if you could share with the audience what some of the drivers were behind that early adoption and what that means for the member experience. I look forward to hearing the journey and why early adoption was important.
Okay, Lisa. Yes, Sicredi voluntarily entered phase 1 of open banking implementation, still in April 2021. Our main expectation regarding open finance was that the ecosystem would bring new opportunities for people to discover the benefits that credit unions offers, providing an environment with more transparency and freedom of choice. The user on the focus, it's very important to say. Furthermore, we aimed to learn from the process, generating new opportunities for connection and innovation to facilitate the daily financial lives of our members. Through Open Finance, we also had the expectation to offer even better credit conditions to our members with appropriate rates, tariffs, and limits based on your profile and the history. But I think that the most important thing is that the user is in the center. It's very important. Open Finance brings it to us, and we have to use this knowledge to help us, members and the users.
I love your members' centricity. And it was one of the things that struck me that is very similar to Sicredi and your commitment to your co-op members and credit unions we see here in the US. I know, Elaine, at last month's March of 2024, one of your colleagues presented at the FDX Global Summit your case study, which really shows results and real value, what we heard Don and DW talking about. Would you walk us through what some of the benefits and learnings you had in this journey? Because I think it helps show a real case study of the value that you drove for your members.
Yes, yes, of course. We have some interesting numbers and results. Okay. For example, we are talking about more than 349,000 associated members with consents, active consents. We have until now 684,000 consents and 9.8 thousand payment initiation transactions. Some results converted to American dollars, okay? 59 millions converted into deals through business opportunities managed by account managers. 423,000 in savings invested via app. 2.1 million in increase in credit limits on cards. 4.5 million in credit contracted via app, and more than 1 million in incoming cash deposits as payment initiator. And there are also no measurable benefits, such as brand exposure and the learning from experience exchanges with other institutions participating in the ecosystem. And it's very important because we can evaluate and learn with the process and bring more benefits and have a look to our users in the future.
Elaine, those are amazing results, and results that are driven from member centricity, right? It was all about your members, but it benefited the co-op.
Yes. When we look to the users, the results come very, very not easy, but it's a consequence.
And again, as we heard early, we did not see a mass exodus. We see value and growth, which is awesome. DW, I know you've been working with local economies, with credit unions. What do you think is more opportunity and more value from this world of open data access? And any insights for our audience?
Well, at its core, the ruling is going to recenter data around the consumer, around the individual. That's empowering. There's aspects to it which are democratizing potentially. We hopefully are going to really push the democratizing aspects of it for who we serve, which is diverse small businesses. And increasing access also means that underwriting is going to, I believe, be transformed. Now, we're not in the underwriting space yet, but we have some use of data. For example, Square Capital that doesn't use the credit rating systems to offer loans. They use algorithm based on actual data, and they're able to do that because they also have the transactional side. Now, if institutions could employ that kind of opportunity and that data and offer just-in-time opportunities to their members, then that's going to at least keep their guard the retention of that member, but also serve them in a way that unlocks capital for people that I believe may be left out of the existing financial system and our current credit rating structure. So a move away from dependence on how we've allowed people to, as how we have built a system around credit worthiness in the US thus far. So I think even CDFIs having a chance to pull in this data and create a real tacit picture of the financial investability of someone who's looking for a loan, small business loan, wanting to be able to refinance without having to shift institutions, but instead, can I pull in the right data and allow for my financial advisor, my accountant, to look at my assets using open data access? And that's really, I think, again, empowering for the individual. And the institutions and fintechs that serve that empowerment are going to win.
I love it. So it really is going to reshape how business is done, is what I'm hearing.
It's going to flip it around to be, member centric instead of institution centric.
And to me, that's the big win, right? Because when you're member or customer centric, like we heard from Sicredi, it's a win-win across the board. Don, you work across Canada and North America with institutions of all sizes. Any additional opportunities our audience should be looking at as they're plotting their strategy?
Sure. And I did want to recap on some of Elaine's numbers real quick. And just, Elaine, you saw an increase in deposits, customers, volume, value per customer, all through open finance and net income. So I just wanted to recap those. I'm a numbers guy. But I mean, I want you to think about, as DW mentioned, going to be able to use cash flow underwriting is useful. It gets you back to the old 5 C's of credit, right? Character, conditions, capacity, collateral, character. And the idea that you can actually make decisions that are as good or better than other older methodologies, I think is incredibly useful when you're dealing with thin file and no file consumers and small businesses that may be thin file themselves. And so the ability to have that data in real time, I think, gives a degree of confidence. If you're a small business lender at a community institution, being able to pull data in real time instead of waiting for that once a year stale financial, audited financial that you get or dump from their accounting software that is unaudited, that's already stale by the time you get it. Wouldn't it be great to know in real time, hey, they need an extended line of credit, or hey, by the way, they might benefit for some trade finance, or a variety of other things, and knowing very quickly before it becomes an issue, before the need window has passed. I think those are all incredible items. We're also seeing innovation about being able to report pre-fraud data. Oftentimes, apps are the canary in the coal mine, and being able to then use these secure rails to pass data upstream. Hey, I'm seeing something weird with Lisa's account. You might want to go look at that. And here's what I'm seeing. I mean, there's a variety of things we can do to help the unbanked, underbanked, thin file, no file, but also to help businesses honestly do a better job in banks and community institutions, serve their clients better, and just take a lot of the time and manual process error out of the equation.
And it really does come down to waiting is more risky than going early, and the benefits of leapfrogging, right? If you're a smaller institution, it can help you leapfrog a financial powerhouse. So I think wise words.
With this standard, you have the same API standard as the $1 trillion banks do. You have the same connectivity as the $1 trillion banks do. Remember how I was talking earlier about, gosh, when are you going to get online banking? Gosh, when are you going to get mobile banking? And it was kind of whatever you cobbled together. And you could tell there was a difference between what a $1 trillion bank could build and honestly what a community institution could offer. This is different. This is a common interface, same one for everyone. This is a true level playing field. You can offer the same speed of service to the same big and small fintechs as the bigs can. When have you ever had that ability in your tech portfolio to compete peer-to-peer, capability with capability with these large organizations? Never.
Love it. Love it. Well, we're almost at the end of our time together. It's gone so quickly. So I want to ask each of you to give our audience a piece of advice. And Elaine, we're going to start to you. What advice would you give to U.S. credit unions?
Okay, I have two important things, but it's really very quickly, okay? The first one is listen to your associates and collaborators, and after understanding their real needs, use Open Finance as a facilitator to meet these needs. Open Finance only makes sense if it serves and improves the lives of users of the financial system. And the second one is choose reliable partners. Sensedia was an important and wise choice to help us with the challenge of implementing Open Finance. This made us more confident to start and continue in this journey. Thank you very much.
Thank you so much for being here. And we have so much more. We will have a case study link to the case study so that people can really get their arms around the great work you've done. Thank you so much for being here. DW, what advice do you have for fintechs?
Well, there's a lot of opportunity already in how the rails are changing for faster transactions, such as FedNow and real-time payments. That's already motivating a rethink of opportunities that previously were just not available. And open banking is going to open up new opportunities. And FTX represents a standard, which I'm really excited about because, think about like an electrical outlet, a plug. It's a standard, at least across the US, we can use the same plug consistently. And that allows for the innovation to be focused around what you do with that energy and that power. And so it's important that we support one standard and really galvanize around that, and that's FTX from our standpoint. As open banking moves from an idea in the US to a requirement over the next couple of years, fintechs already are thinking about using the principles of open banking, taking advantage of what has worked as we've done in other countries. But the methods are screen scraping and collecting IDs, banking credential aggregators, etc. And so to be able to use APIs as the basis for partnership, I really believe that APIs are the language of partnership and work directly in a privacy concentric way, to work directly in a privacy concentric way with consumer data in a way that benefits them and is symbiotic with credit unions, community banks, and other institutions that want to give more value and are looking at fintechs, not sure which ones are really going to be the leverage that would give them a better chance of reaching their goals. So I think for fintechs, it's going to separate the ones that are serious about these concerns, industry-wide concerns about privacy and access, from ones that just don't have the same priorities in place that the institutions that serve these members do.
Thank you, DW. What I'm hearing is standards rule and early mover advantages are going to be key here, but also this is the long haul about open, secure, and innovation. Thank you so much for being here, DW. It's always a pleasure to have Localite with us. And last but not least, Don, what is your advice for financial service companies, technology providers in these days ahead?
Well, I think Elaine said it best. If open finance has to solve a problem and meet a need for the consumer, or there's no point to it. And so I think within FTX, we've been very careful of what problem does this solve. Now we have 230 members, but we need all of you who are in the audience to also, get a copy of the spec to join. We want your voices as well and make sure this continues to meet your needs. This is an open standard. It's freely available, but we definitely need you. But I want you to also think about not just data out, but data in. I will tell you one quote, if you take nothing else away: API is the next new channel. Just like you said, digital, this is the third leg of your digital offering. So think about being able to pre-fill an account application with no errors, no delays, and accurate data. Think about being able to get bank statements from another FI in real time with no chain of custody issues and no errors. What would that do to delays? Well, there wouldn't be any. You could actually decision them and provision them in real time. Well, that means you can get more throughput through your existing process. More throughput means more revenue. This is a revenue play. This is not a check the box compliance play. If you miss that part of this assignment and you've missed the point of this is a net new channel, and you need to be thinking about what is this going to do with our digital play. So we're here to help. And again, all of my colleagues on this call talked about, you have a consortium. There are other people out here who are willing to help you. There are a lot of free tools and resources, by all means, but you cannot wait. You cannot wait to the last minute, slap it in and call it done. Just like you couldn't wait to the last minute and slap in any old website. You had to be thoughtful and proactive about what you did. This is your brand. And so I would leave you with that. Be prepared to augment your digital offering with this net new channel. And I'll leave it back to Lisa.
Excellent advice, Don. And Elaine, DW, and Don, I can't thank you enough. And if I weren't in this open banking industry, I'd be compelled to go do something now. So hopefully our audience is too. So that recaps our Sensedia Talks webinar today. We started with talking about the timeline and some challenges, but more importantly, the challenges are overshadowed by real results like increases in deposits and lending, the democratization and open access for smaller businesses and community banks and credit unions. And there are resources out there to help. And we're going to show this slide now, which gives you a resource to go to the Financial Data Exchange and take advantage of their resources. And I'd even say consider a membership, but I also know that may not be for everybody. But we're members, we're part of working groups. It's a way to participate. To our next resource, I want to draw your attention to a chance to give input to Local Light and DW's Thought Leadership Alliance called the Ko-Fi Allowance in partnership with Sensedia and everyone on this call. We'd love to hear from you on this survey. So you're going to see DW's email there. Please send him an email and we will get you a survey. And then we'll be sharing that content at a later date with DW and team. Our next resource, we only heard a little bit from Elaine about the value of being member-centric and the results that Open Finance gave and delivered to not only the members, but to Sicredi. So this is a link to the Sicredi case study, and we'd be happy to talk with you in more depth about that. And finally, the last link, for those of you that are still in the early stages of education, this is a non-salesy, non-product guide that we've put together called Open Banking Basics. And I will share with you that we have drawn from FDX the standards and some terminology. Don, thank you for letting us share that. And you can get that here. And if you'd like to keep the conversation going, here's my LinkedIn and my email address. Would love to hear from you. For today, we'll return you to your jobs or your families, depending upon what time of the day you're watching this. And again, thank you for joining Sensedia Talks. To our panelists, thank you, thank you, thank you. And all of you, will see you soon.